Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the cyclicals. We're going to take a look at the retailers. Okay, these are all the stores that everybody shops at to go buy clothes, toys, whatever, miscellaneous goods. This is Walmart, Macy's, Costco, Target, Kohl's, Abercrombie and Fitch, Dollar Tree, JCPenney's, and Sears. Okay, so we're going to look at all their charts and what they're all telling you, especially with Walmart leading the way lower, that the entire sector is under pressure right now. So there's a major bear raid on the retailers. And take a look at the WMT chart. Okay, so they reported earnings today, and this was the biggest drop in for a super long time for Walmart. It had been a long time since it had this kind of gap down open on earnings, and so this was a major bearish move. As you can see here, our RSI is at 34. Check out Fasto. I mean, it's pegged at the bottom. I mean, so this was people are going to say this is overdone and it could get a technical bounce off of this level. Right now it's hitting the 100-day simple moving average at 94.82. That is the gold line. It did close below that level today. Notice today's candle has no lower wick. Low of day was the last trade of the day. That signals that the bears were in control all the way into the close. Okay, today's candle did also close below that lower Bollinger Band, which is at 95, 97, basically 96. And so the candles could get back above that 100-day simple moving average and work back into the bands. They'll have to get back above EMA 4 all the way up there at 99.47. Basically, the big gap down is signaling more downside risk. If that 100-day simple moving average in 95 level turns into resistance, well, then you could see a larger pullback, and then the next big simple moving average is 86, or it's the 200-day simple moving average down there at 86. You're going to have support at the bottom of this gap. Okay, so there's a gap down here, and it's currently, trying to bounce off of the bottom of the gap level. There's a space between, the top of this candle and the bottom of this candle, and so currently the share price is bouncing off the 100-day simple moving average and the top of the gap support level here. And so if it breaks through, you could see this gap filled and a drop down to 90.50. Check out the huge volume spike today. So there was major selling, big spike down on accumulation distribution, a bearish crossover on the MACD, or not accumulation distribution, but a bearish crossover on the MACD 8, 13, and 5. So just really signaling downside risk. Also, there was a PSAR bear flip. The dots are back above the candles. And if you look at the Walmart puts today, check it out. They delivered huge percentage gains. You had some that were as high as nearly 500% today. So giant percentage gains on the puts on the big move down. As you can see, the calls were wiped out there. Big crushing below to the calls. And so keep an eye on puts for the sector if it continues to have downward pressure. Check out Macy's here. As you can see, it's on a 2-day pullback. Notice that it had closed above the middle Bollinger Band last Thursday. It formed a red candle and bearish Haremy reversal pattern on Friday, and that pattern was confirmed today. So you have bearish reversal confirmation, and then you've got the candles are hitting that middle Bollinger Band and 50-day simple moving average at 25.62 support level. If the dotted purple line and green line break, you could see a drop down to 25 to test that 300-day simple moving average. So it needs to hold the middle Bollinger Band. This is a crucial level. If Macy's can stay above 25.50, then it could keep this uptrend going, the new uptrend. If you see it drop back below 25.50, that's going to be a signal that it wasn't quite ready and more consolidation. If you look at Macy's here, as you can see, the puts were delivering some nice respectable percentage gains today. So good gains on the puts. If you look at Costco here, ticker symbol COST, it closed down 1.8% today. And I did just read a filing where an insider reported 0 shares. That they currently hold 0 shares, which I don't know how big of a holder they were. It was just surprising to see that when you've got such a big move to the downside here. So if you look at it yesterday or on Friday, there was this doji that formed. form. And when you have a multi-day uptrend and a doji forms at the top, that signals downside risk. So those that held got punished with the gap down open and then the close below the dotted purple line and below the green line. Costco is now below the middle Bollinger Band, below the 50-day simple moving average. It's at risk of continuing this previous downtrend that had started on this close below the middle Bollinger Band on February 2nd. And so if it right now it has to hold EMAs 4 and 8 at 188.55 and 187.43. If you see it drop below 187.50, that's going to signal more downside risk. You could see it retrace back down to that 100-day simple moving average at 177 if the middle Bollinger Band and 50-day simple moving average turn into resistance. As you can see here, some of the Costco puts were delivering some nice percentage gains. Some were up over 100% today. Okay, let's look at Target here. Okay, so Target, had a big gap down as well. It formed that bearish engulfing reversal pattern here. It had the red candle. They were very small candles. So it wasn't a it was hard to determine how strong this pattern was, but man, today there was a big gap down open. So whoever held over the weekend got severely punished today. And so notice a doji did form, and so after a pullback, many times doji will signal a bounce. So look for a potential bounce here. If it doesn't get back above the middle Bollinger Band at 73.88, that 74 resistance level, that's going to signal downside risk. It needs to be above 74 to head higher for Target. Now, if 74 does turn into resistance, it could retrace down here and test this 50-day simple moving average at 69.78. You would see that 70 support zone tested if 74 resistance fails to break. And then, yeah, if you look at Target here, once again, some nice percentage gains for some of the puts, if you had the right contract, delivered some nice gains today. Okay, now look at Kohl's, ticker symbol KSS. Yeah, so this had the gap down open as well. Everybody got punished by the Walmart earnings, and so it's putting pressure on the entire sector. As you can see here, it did close right below that middle Bollinger Band at 64.56. If that level turns into resistance, it's going to signal that this new uptrend didn't happen and more consolidation. You could see it retest this 50-day simple moving average and the 60 support zone down here. It's all about staying above this dotted purple line, which is the 20-day simple moving average for the stocks that have gotten back above that level. If that turns into resistance, it signals more downside risk, just like this candle on February 2nd when there was a close below the dotted purple line. It signaled downside risk, and there was multiple, lots of consolidation had followed. And so in order to get that new uptrend going, you want to see KSS above 65. If 65 remains resistance, you could see a drop down to 60. Once again, you have, it's a little bit of a mixed bag here, but you have some green puts on the move today, which would likely heat up if there was a further pullback. Okay, look at Abercrombie and Fitch, ticker symbol ANF. Okay, so it closed down nearly 2% today, and so it's on a multi-day pullback as well. It formed the black candle here, which signaled indecision. That was followed by a red candle on Friday, and then another red candle today. And so it's going to be all about holding the middle Bollinger Band at 21.24. Notice how all these candles here were working on that support zone, and so you might see some more action similar to that. It's got the it has this ascending support line going. So it'd be really important that this level holds. It's been bouncing off of the support line. So that 21 level is going to be a big level. If it drops below 21.24 and then you see it drop below 20.75, that's going to be your signal that it could come all the way down and test the 50-day simple moving average at 19.50. That's the downside risk on all these retailers, is if the middle Bollinger Band turns into resistance, they all have the 50-day simple moving average lined up just below, and so they're likely to come down and test that zone. Similar to here, it didn't make it all the way down to the 50-day simple moving average. We'll just have to see if the buyers step up here. The chart is breaking down. If you look here, it has a descending resistance line going, and so this is what we call a symmetrical triangle pattern. So you have a descending resistance, ascending support, support. So a break above the red line, the descending resistance line, that's going to signal a breakout higher. So if you see it above 22, that's going to be really bullish. Now if it breaks below the green ascending support line, that's going to signal downside risk. So below 2075 is going to signal the chart's breaking down. Okay, so if you look at it here for the the options, it's a mixed bag. It's a total mixed bag today. There's a lot of indecisions with ANF right now. A lot of indecision. It's you'll know more by whether or not this middle Bollinger Band holds on whether or not this uptrend is going to be intact. Okay, let's look at Dollar Tree here. So Dollar Tree, ticker symbol DLTR, has been under pressure. It's currently in a downtrend. It's below the 50-day simple moving average. It's below the middle Bollinger Band. Notice how this green line here has been resistance. When this candle formed on the second, notice how all these stocks that I just showed you that are in the same sector, how they had the how you have the breakdown on the same day for Target and Kohl's. You have the breakdown here on Target below the middle Bollinger Band. You have the breakdown for Costco on the same day below the middle Bollinger Band. Macy's had already broken had earlier broken below the middle Bollinger Band just a couple days earlier, and then and so then you had Walmart here that broke down below the middle Bollinger Band on the 5th, and so they were all breaking that middle Bollinger Band support level at the same time, or around the same time. And so it was that was your signal. When the middle Bollinger Band that is holding, it's a signal of an uptrend. Notice how all these candles are heading higher. And then once there was a close below on this day, it signaled a change in the trend, a bearish change in trend. And that happened all the way across the sector. And so right now for Dollar Tree, it has to get above the green line and the dotted purple line. Notice how they've come to a flex point. They're at the same level, 109.77. If it can get above this 110 level, that would be a signal that Dollar Tree is finally ready to head higher. It's currently below EMA's 4, 8, and 13. It's signaling it's a risk to hold. The downside risk is that it tests this 100-day simple moving average at 101.70. Drop below the 100-day simple moving average would be the big red flag. If you're a bull, you're looking for Dollar Tree above 110. Once again, a mixed bag here, with the puts and the calls. So it's that happens when you've got the big indecisions candles, sideways action. There's no clear pattern here, and so it needs to get out of the current channel. And so traders can either see as this breaking out or breaking down. It's in a holding pattern right now. Okay, let's look at JCP. This is JCPenney. It's this one is actually it's been performing a little better than the other ones. It's just starting to break down today. It still has RSI at 58. As you can see, it came up and hit the key resistance level today. It was on an epic multi-day run. This ran for 6 days in a row. It hit this red line, which is the 200-day simple moving average, currently at $4. It hit that level back in January, and that signaled the top. It pulled all the way down to the 100-day simple moving average and the 50-day simple moving average. That's the green and the gold line. Notice the crossover here, how the green line crossed over the gold line. That signals the chart is building strength. When you get the 50-day simple moving average crossing over the 100-day simple moving average to the upside, that's a good sign the chart's building strength. But it came back up and it hit that 200-day simple moving average and pulled back today, so that's a red flag. And with all the rest of the sector breaking down, you have to be cautious here. So going forward for JCPenney, above $4, above the 200-day simple moving average, signals more upside potential, and that would signal to stay long. If it fails to break that level, you're likely to see the middle Bollinger Band tested at 368. It has to hold that level to keep this uptrend going. If it drops back below the middle Bollinger Band, you're likely to see the 50-day simple moving average at 355, or even the 100-day simple moving average at 342 tested. So it needs to stay above 370 and break $4 to head higher. A drop below 370 would be a red flag. Once again, you have the mixed bag on the calls and the options. It's because it's at the top of the channel here. You've got the close above the open. It was very close to today's close was very close to the close on Friday. As you can see, the previous close was 388, and today's close was at 387. So that's so it's a wash today. That it ran up to 4 and back down to 380, but it closed right where it started. And so basically, if you're playing this JCPenney, what you want to watch is this pink line. A close below 380, below EMA 4 is going to be your your signal, it's cooling down. So if you're long, you want to see JCP stay above 380. Okay, so finally, let's look at Sears Holding, ticker symbol SHLD. Yeah, as you can see, this is the worst of breed, and so it has the ugliest chart. And yeah, it's been in this nasty downtrend. And notice how over here in December, it got above the middle Bollinger Band, the dotted purple line that failed to hold, and it pulled back. January, same thing happened. Got above the middle Bollinger Band temporarily for 2 days, and then pulled back. And then once again, history repeats. This is February, and it's back above the middle Bollinger Band. Support failed to hold, and it pulled back. So if history repeats, the downtrend continues, and you're looking at a retest of that $2 support zone. Very bearish close today for SHLD on this candle. The red flag was on Friday. You know, when you see a stock continually have the same pattern, you know, you have to anticipate history repeating, but keep an eye out for a change in trend. But anticipate that history is likely to repeat, especially it keeps happening over and over again. That's what happens a lot in the stock market. You know, history repeats until it doesn't, and then you have to be able to identify the change in trend. But once again, you know, so basically my point is last week you had the red flag with that red candle, and that was signaling that it was a risk to hold. And when a red candle formed today, it was your signal to get out, especially when the entire sector is under pressure. You're not going to head higher when everything else in the sector is getting punished. Okay, so if the middle Bollinger Band at 249 turns into resistance, that's going to signal more downside risk, putting the $2 level on deck. If it gets back above 250 and turns that 250 into support, then you would be looking at a run up to the 50-day simple moving average at 323. And then, yeah, take a look at the options here. You know, the February 23rd $2 puts, you know, delivered 200% gains today. So yeah, with options trading, you know, you have to get a lot right. You have to get the direction, you have to get the strike price right, and then you have to get the expiration date right. And so, you know, if you can put them all together, and you know, you can make magic. But yeah, you know, if you get it wrong, you know, it can spell disaster. Yeah, so yeah, if you'd like to learn more about charts and technical analysis and options trading, please come check out our chat. I'll post the link below the YouTube channel. Thank you, or below the YouTube video. Thanks for viewing.